Let's talk about NIIT Technologies for now. 282, as far as this 283 almost on the stock, it's up about 1%. Mid-cap tech has done well. Large-cap techs have done well, broadly speaking. Credit Suisse hosted the NIIT Technologies management in meetings with investors recently, towards the end of last month. Credit Suisse has got an outperformer rating on the company, on the stock, and they think the price is worth, I think, about 370 odd rupees or so, 380, I beg your pardon, in about a year's time. Let's get in some direct talk going with the management. Pratibha Advani is CFO at the company, joins us from Delhi right now. Ma'am, thanks very much for your time. Good morning.
Good morning. Thank you.
I just want to start with and get something out of the way, which I think you've heard and answered in other forums as well. The block sale of shares by the promoters recently, that came up in the meeting with investors as well. Just wanted to get that out of the way because the stock price corrected post that, and it's not exactly come up after that. Could you just clarify that for us, ma'am?
Yeah, so I think the intrinsic performance of the company is speaking for itself, and that is why, despite the sale of the stock, our shares have bounced back. The promoter sale of shares has been done primarily to fund the NIIT University, which is a not-for-profit organization. But more questions on that should best be answered by the promoters themselves. But all that I can add is that the company's performance is continue to be strong. Last quarter, our top line had grown by 43% at 469 crores. Bottom line grew by 40%. We are confident of beating Nasscom guidelines vis-a-vis our revenue growth projections.
All right, got that. You'd appreciate that in an environment like this, promoters buying stock is always considered very good. That also should be taken with a pinch of salt, but promoters' stake sale or selling stock in the market is always considered to be, is always at least eyed with a fair bit, degree of suspicion. But you're saying that's for essentially raising money to fund charitable initiatives. Let's move on, ma'am. I went through the report, and the management seems pretty undeterred by the tough global macro environment. You're saying that you'd grow faster than the industry average. How do you do that? You're a small niche company in the IT technology space. Larger peers essentially are telling us that, growth perhaps this year will fall to about single digits, dollar revenue growth. How do you tackle the environment?
So we would actually attribute our growth to our business strategy, which has been focus and differentiate. So if you look at our two verticals, which are travel, transport, and BFSI, both have been the key growth drivers for us. Travel between last quarter has grown by 7%. BFSI has grown by 6-odd%. We actually have a fairly balanced vertical as well as a geographical mix, and a reliance on any particular vertical or geography is not there. So if you actually look, 1/3 of our revenue is coming in from EMEA, 1/3 comes from America, and the balance from Asia Pacific. Similarly, travel, transport, and logistics contributes almost 40% to our revenue. BFSI contributes about 34-odd%. Travel and transport has grown by 61% year on year for us. This has been primarily on account of, deeper customer mining of our existing accounts. We participated in a lot of transformational deals. So very recently, we've actually closed a transformational deal with a full network carrier. Acquisitions within the space, and of course, one would attribute growth to excellent talent acquisition that we have done over the last 1 year. Incidentally, we are believers that a turbulent and challenging environment itself opens a plethora of opportunities. So while we are witnessing softness in BFSI, we've actually been able to look at new opportunities within the BFS space in North America. So hitherto, the mid-tier banks in US had not been tapped, and they are actually the first-time outsourcers, and we've been able to bring some of these banks into our fold. Similarly, there's a very interesting trend that we are seeing. We're actually seeing that the CIOs are moving away from being risk-averse. And this is another good opportunity area for especially companies like us who are highly specialized in our niche verticals. So what the CIOs currently are looking at are more creative business solutions and better value propositions. And that is where our specialization is coming into the forefront. So suddenly we are actually moving away from engagements by being just mere vendors to actually being business partners to our customers. A recent deal that we've concluded is with the Tobacco Board in India, which is actually a completely variable pricing deal. And this clearly establishes that they don't consider us to be a vendor but a partner, because as and when the quantum of tobacco that they auction increases, so does the payout to us increase. Similarly, if there's a downturn, then the payout actually decreases to us. So effectively, they don't have to, at any given point, if they're going through turbulent times or challenging business conditions, need to cancel our contract, because it's been worked in a manner which gives them the flexibility. So increasingly, we are seeing that it is such deals, bespoke pricing models, that are actually going to change the engagement model with our customers. And we are seeing these to be good growth opportunities. Also, we've been very fortunate in actually doing some excellent customer mining. So our top 10 customers have actually grown by 39% year on year. So these are some of the factors that have been contributing to our growth.
Ma'am, two deals we spoke about. One is the Tobacco Board here, and the other is a global deal. Both were struck in the quarter we are in right now?
That's right.
Right.
As a matter of fact, added to this, we've also we are currently participating in a e-governance government program. This is the CCTNS. So we've, in the last 1 year, won 4 deals across 4 states, the total aggregate value of which is close to 347 crores. And obviously, the government business is helping us bring about more revenue predictability in this highly turbulent environment, and also eases any kind of FX volatility that our industry is currently facing.
Okay. The global deal, ma'am, could you give us a ballpark idea of the size?
Actually, this is confidential, and we've not got a sign-off from a customer to talk about. But I could talk about another deal that we've also closed with a BFSI customer. This is around contract renewal, which also involves vendor consolidation. And this is upwards of a $15 million deal.
All right, got that, ma'am. So things are looking pretty okay, although global macros are quite challenging. Thanks very much, ma'am. Appreciate you joining in. Pratibha Advani, CFO at NIIT Technologies, answering some of those questions.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.